Hi everyone, welcome back to Corporate Decoder, the place where we take those super long confusing corporate reports and turn them into something you can actually understand. Today we're diving into a proxy statement, which sounds boring, but trust me, there are some sneaky details inside that can tell us a lot about what's really going on at Avient. We'll uncover executive pay, potential risks, and even some corporate governance stuff that impacts how the company is run, so buckle up, it's about to get interesting. Avient is asking its shareholders to vote on some important stuff, from electing directors to approving how much those directors are paid. It's all in this proxy statement which they need to file with the SEC. Let's break it down. First, there is a letter from the CEO and chairman which sounds nice and friendly. It's an invite to the annual meeting. In it, they're asking for your vote on key issues. The big things to vote on are electing 12 directors, saying yes or no to the executive pay packages, and ratifying the appointment of their accounting firm Ernst & Young. The board wants you to vote for all their recommendations. Wondering if you get a say? If you owned Avient stock on March 18th of this year, you're eligible to vote. You can do it online, by phone, or by mailing in your proxy card. Now, before we get to the money stuff, let's see what Avient's all about. They want to be known for their materials solutions that help customers succeed while making the world sustainable. They call it focusing on people, products, planet, and performance. They also mentioned they have a new strategy now for growth. Of course, no company report is complete without a warning about things that could go wrong. Avient lists a bunch of risks, from credit market problems and currency fluctuations to supply chain issues and changes in laws. Seems like they're covering all their bases. One thing I found interesting here is their supply chain seems vulnerable, and they also call out regulation changes in plastic. This means they see some future trouble in those areas. Time to check out the folks running the show. You get to vote on 12 director nominees. The board has different committees like audit, compensation, and governance. This is how many meetings each committee held in the past year. It looks like the audit committee was pretty busy with 7 meetings. What do these directors bring to the table? Avient summarizes their skills, experience, and backgrounds. We're talking about expertise in finance, international business, industry knowledge, technology, and more. Who's keeping an eye on things? The board oversees risk management both directly and through its committees. The audit committee handles financial risks and cybersecurity. The compensation committee looks at risks related to pay, and the governance committee handles risks related to pay, and the governance committee handles risks related to sustainability. Here are all the details on the director nominees, their backgrounds, qualifications, and what makes them suitable for the job. For example, Robert Abernathy, who retired as chairman and CEO of a healthcare company, or Gregory Goff, who used to be the executive vice chairman of Marathon Petroleum Corporation, or Neil Green, who is the executive vice president and chief digital officer at Otis Worldwide Corporation, a leading elevator and escalator manufacturing, installation and service company. I'm not going to name all of them, but looks like they have broad experience running large companies. Now, let's talk about money. Shareholders get to give an advisory vote on executive compensation. It's a say-on-pay vote. The goal of Avient's executive pay is to reward performance, align with shareholder interests, and attract and retain talent. The board wants you to vote for the executive compensation packages. Avient is asking you to approve their choice of Ernst & Young as their accounting firm. The board recommends you vote for it. Here is some data about how much Ernst & Young are paid. Audit services totaled $5.2 million in 2024, and tax services $0.4 million, small chunk of change. The audit committee, which is responsible for things like financial statements and internal controls, recommends you keep EY. The board says that all but one of their directors is independent. That one exception would be the CEO. To align the directors' interests with shareholders, Avient has stock ownership guidelines. It means that they need to own some stock. The target for directors is 12,500 shares. Time for the compensation discussion and analysis, or CDNA. This is where Avient explains how they pay their top executives. They note some leadership transition. Amy Sanders became a senior vice president while Michael Garrett retired. Avient claims their compensation is tied to company performance, focusing on things like operating performance and shareholder returns. Here's how they decide who gets paid what. It's based on meeting goals for adjusted operating income, working capital as a percentage of sales, and sustainability metrics. Dr. Kanper, Ms. Rathbun, and Mrs. Bakes and Sanders' 2024 annual incentive program opportunities were based on consolidated results. We can see the key metrics in this part of the table. This is how the top people in this company are incentivized. It sounds like they met many of their goals, but not all of them. They hit their targets for the safety of their staff. Here's the most important part, how those results translated into dollars for the executives. The total target opportunity and payouts. Dr. Kamper got $239 million and Ms. Beggs got $839 million and Ms. Beggs got $8046K. Now let's see what they get for the long term, stock options, performance shares, all that good stuff. The Compensation Committee approved long-term incentive opportunities for the named executive officers for 2024. Dr. Kanpur received awards of up to 440% of his base salary. That is more than 4x his salary. These units pay out depending on Avient's performance. Now it's getting interesting. In February, Mr. Rathbun was terminated without a cause, so his departure will need to be compensated. These numbers show deferred balances and contributions of the top people. For example, J.R. Beggs has about 2.4 M, while Dr. Kandper has none at all in the plan. What happens if someone gets fired, retires, or the company gets sold? Turns out they get a lot. In case of a regular termination without cause, Kanpur would be entitled to about 4.5 M, the others much less. If a change of control happened, the severance gets a lot higher, where Kanpur would get about 7 M. Finally, the CEO pay ratio. The CEO makes 112 times the median employee. The CEO's annual pay was almost 7 million employee. The CEO's annual pay was almost 7 million employee, made just over $61,000. So what does all this mean? Avient had a solid year. Performance incentives for executives were paid out accordingly. The executive compensation is something to keep in mind as a large chunk of the company's expenses go to only a few people. Looking ahead, Avient faces some challenges like raw material price fluctuations, supply chain issues, and changing regulations. But overall, the company seems to be on a decent course. The future of the company is unknown, but the board seem to agree on their direction. I personally want to see whether this year's results translate to higher shareholder returns in the future. So, what do you think about Avient? Let me know in the comments. Don't forget to like and subscribe for more corporate deep dives. Thanks for watching.